Okay, everyone, can you hear me? Let's allow to speak, allow to speak. Yeah, I allow 3 or 4 people allowed to speak right now. So I need to make sure that you can hear me or not. You can open up your microphone. I allow 3 person.
I'm hearing. Thank you, sir.
Yeah, I can hear
Oh,
you.
I wasn't able to hear you, but right now I can hear you. Okay, looks like everything is okay. Okay, so before taking some questions, I would like to talk more about the most asked questions so far. I checked the emails, but actually, I wanted to people send emails after the session, but some people probably got it wrong and sent emails earlier. So I checked some of them for the session. But besides that, emails, I've been taking questions so long, maybe since March or April. And the most, and I would like to talk about the most asked questions so far first, um, and then actually I will prefer taking your questions by voice before the session ends. Okay, so the most asked question uh, is how can we count? So I'm teaching this properly in the videos, but maybe some people need to hear this live. That's why I'm going to talk about that the basic sequence counting here. So in the basic sequence counting, uh, people might understand some things a bit wrong. So okay, we have some basic concepts, and I need to remind you again in this session. Time expansion is our first concept. Time contraction is our second concept, and time distortion. Uh, Time distortion is a very different concept and hard to spot in the real market conditions. The best choice for traders uh, is to ignore time distortion. We have two different approach to know time distortion. So we can follow the expansions. I mean time expansion, not the price expansion first. If we follow time expansions followed by price expansions properly, then we can anticipate how time can be contracted. Once we understand this, we can anticipate time distortion. And what's going to happen if we anticipate time distortions? We're going to know when exactly consolidations can begin, or maybe uh, how that consolidation is going to end. That can end at 21st candle, or at least in the rare conditions, that consolidation can end at 17th candle. This is what's happening in the markets most of the time. If you backtested what I have taught you so far, so we need to separate these things. That's why I'm using different colors for that. There is a reason. These are three core principles of my time dilation theory. But I haven't taught you about time distortions a lot so far. I mostly talked about time expansions and time contractions. because as I previously said that if we understand these two core principles of my time dilation theory, you can know uh, what to expect in the market, when to uh, anticipate consolidations, and how that consolidation is going to form. You're going to know that if it takes 20 candle or maybe 10 candle consolidation, once you anticipate that, you can easily take the trades, basically following the trend, uh, if it's uptrend or downtrend, doesn't matter. So that's why I'm using these colors. The red one is time distortion and the green one expansion and contraction. So these core three principles should be separated each other like that. Green and red. That's why I'm using these colors for that. So let me get back to when I was talking about that consolidation part. It's pretty easy counting these candles like that, and I think uh, most of the people uh, understood this approach properly, but some people, I think the beginners or some people having so many questions and haven't tried anything in the markets, uh, stuck this counting things, but it's easy. So before taking questions, I'm going to clarify these things in this Q&A session. In the marketplace, every mentor teacher can show you examples after price did its thing. Uh, but here, by introducing and teaching my concepts, I need to do that as well at first. But live trading with these is different, you know. I'm sure that many of you here tried many concepts so far. If you are not beginner trader, maybe you tried ICT, maybe you tried different retail approach. Maybe you tried um, these new concepts in the X divisor. Uh, but most of you probably have same questions about trading the live conditions. So in this Q&A session, I'm going to talking about over the things that happened already, but I have to write now because I need to do that. But after this Q&A session, I also upload live trade videos. This is the thing you need to learn. Okay, so first I want you to understand these things because I've been asked this so many times. People asking for how I can take trades in the live condition. But before that, I need to show you the counting here. After price did its thing. First, I wanted to clarify this thing before starting counting. Okay, so you can count anywhere because universe has almost infinitive reference points. When you look at your own life or nature or anything, you will see that there are lots of reference points. You can start, you can end, or you can take reference as. So same thing happening in the marketplace as well. Okay, we can count using every reference point here. Lows, highs, maybe short-term highs. I'm not sure if you can see that or not, but if we go to daily chart or 4-hour chart, here's a bottom here. So I can spot this easily due to my experience in the market, in the trading environment. But this is a low. So if I pick this candle as one, many people will, oh, sorry, this one as one. Many people will ask me about why why did you pick this one? Because it's a low on daily chart. I know. I don't need to go to daily chart to understand that. But if we ignore some these little things, we can pick highs and lows because we are on weekly chart right now. I'm doing this without details. So highs, lows. You can pick every reference point, but you need to make sure that even if you pick any high or low, you need to know that this is a huge big consolidation. You need to be aware of that. Once you're aware of that, your perspective should change to the higher time frames. Then you need to start again for counting on monthly chart, or it can be yearly chart as well. Sometimes yearly chart tells you a lot, but in this case, in this area, you don't need uh, yearly chart. Okay, so we have a low here, I mean expansion on monthly chart. We can pick this low. uh, you probably know the counting rules, so we don't pick this black down close candle, bearish candle. It created the low, but it's not bullish close candle, so we pick this one based on the rule 1, 2, 3, and 4. We have 4 candle, 4 month duration here, and expanded to upside. After you get this candle, you don't know. What you're anticipating here is uh, actually 7 candle, right? 1, 2, 3, 4. You can anticipate that maybe 5th candle and 6th candle can give me retracement like that. 5th and 6th. And what you anticipate probably is the next bullish candle should be at 7. This is the normal approach while this is happening in the live, not backtest. 1, 2, 3, 4, 1, 2, 3, 4, 5, 6 retracement for 2 months of duration, then 7 expands, right? But here this didn't happen. We have a retracement candle here, and again expanded, and this candle closed. This is May 2023. After that happens, this monthly candle closes. What I need to think is, okay, time had started to contracted, had been contracted here in the past. So then maybe I think that I should anticipate a big consolidation. And that's why our approach to counting must be like that, just as I did here. Okay, we have 4 candle expansion, 5, 6, 7, 8, 9, 10, and 11, 12. After I see this consolidation, I shouldn't anticipate at a big reversal on 13. Yes, 13 created a low, and this is a big trade opportunity here for you for 1, 2, and 3 months consistently. You can take swing trades, short-term trades. Maybe you can use this 13th month as a bias for your day trades and scalps for the duration of 3 months. But what you should anticipate here on monthly chart is nothing more than a consolidation, because at least you need to know that you will get 20 candle of consolidation. So your thinking should be like that, just as I thought you. So that's why our counting, our consolidation counting, sorry, not classic counting, should start here, because it expanded for four candles and consolidation started here. Yes, it took a time for you to understand if it's consolidation or retracement. Yes, I understand that. But after you understand that, you will know that you'll get 20 candle of consolidation. 1, 2, 3, 4, 5, 6, 7. Sorry, 1, 2, 3, 4, 5, 6, 7. Sorry, I counted wrong here. Sorry. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12, 13, and like that probably 20 here, or let me use that easily. Yeah, 20 bar here. Yes, one here and 21 here. Sorry, 21 here. This is the 21st candle here. This actually uh, this is where consolidation had ended, had collapsed. And that time, what you need to do is changing your mind and having a bias. So you can ask me that if it's bullish or not in that time. You can ask me that, Morpheus, is it going to be bullish right here or bearish? And the answer is where it's on the weekly chart. This is how we use multi-time frame counting. And if we go to weekly chart, our answer exactly that here. Uh, you can pick this candle as one, and remember the resume counting. You can pick this one as well, because on the daily chart it's a proper low. When we count to here, as you see, we get 13 candle here. Just as 13th candle created with the 21st candle on monthly chart, as they are matched, we're going to know that this will change the flow right here with the price. Look at the price here. I mean the price levels. We have this price level. I'm I'm picking this price levels toughly. I mean not a perfection here. I'm just teaching you how I do that. You don't seek for perfection here. Okay, we have this price level, which is 1.12 and 1.11. When we multiply, adding up these numbers together, we get 3 here, and we get 4 here. And once I see that, I know that this is an average price level here, and smart money uses these levels with the time. That's why I count candles, and after that I use that count with the price levels. And once I use that, my bias becomes very clear. So that's why I'm bearish here. But remember, we counted here 13 and 21st on monthly. Don't forget that. And then, okay, time can be contracted. We can have a little consolidations. That's pretty normal. And after that, we have an expansion, new expansion to downside until this daily consolidation. This is how we approach. Okay, probably we have a question. You can ask that. Go for it. Uh, I heard someone's microphone. If you have a question, you can ask for it.
Hi, sir. Can I speak, or anybody else can want to speak?
Sorry, I couldn't hear you properly. Can you please ask me what what you just told to me?
Can I ask a question?
About what? You can ask the question. Yes, go for it. Yes.
Excuse me. Thank you for joining me and others. I want a very principal question. I don't know if you can, or if it's a secret for yourself or not. but I want to know what is truly behind time dilation. Yes, we are counting candles, but you mentioned several times, if I remember correctly, that the main approach for me is not counting, but counting is a tool for reaching the situation for trading or for example, price reversal and any price action. Is it possible to say us some clues on this matter and show us what is truly behind this counting? Thank you very much.
Okay, it's a great question. Yes, counting is a tool, but I think counting makes everything easier to teach for me and to understand for students. So, I would like to give you an example here. Let's talk about ICT's approach while he's training his students. So I watched all the ICT videos from 2016, from 2016 to so far. But I saw that he's not giving students a tool exactly. What he's doing is he's just teaching all of the things together: market maker, buy sell models, FVGs, silver bullet, or other gap things. I mean weekly gaps or daily gaps with this new thing, the nivox. I don't know how to call them because I have not been following ICT so much in the last year or so, but there are many concepts of him. But in the essence of ICT things, actually, it's very easy to me because I studied a lot. So if I need to, or if I had to teach ICT from zero to hero to someone else, for instance, for one-on-one student, what I'm going to do is I'm giving a tool. This tool is market maker buy sell models, and I'm going to create every other things inside of market maker buy sell models. What I'm going to teach first is market maker buy sell models, then the everything else, FVGs, SMT, or other things. But this is not what ICT is not what ICT using. Uh, while he's teaching lots of things. I think this is wrong. That's why I think ICT is a great mentor, but not a great teacher, bad teacher. This is what I believe, by the way, my opinion, by the way. So the reason I told you is that you directly linked to your question.